Thank you for coming. My name is Karlien Porre, and I'm a partner in the Deloitte Treasury Advisory practice in the UK. So we work with organizations and advise them on all aspects of treasury management. So thank you for joining me for the next 15 minutes to hear our thoughts on Brexit. And we were asked around about early summer, sort of in July time, to cover this topic. And I thought, well, that's fine. By October, surely we'll have some answers, and I'll actually know what to talk about and what it means for corporates, what it means for the economy, what it means for us treasurers. We're now 3 months further down the line, and we still have more uncertainties than answers. So what I'll do now is sort of take the next 10, 15 minutes to talk through how do we see the uncertainties, how do we see the risks, how do companies go about trying to deal with those risks, and then finally also clearly a little bit about what does it mean for treasurers. So it's not just pure treasury, we'll sort of cover a bit of the wider aspects as well. And before I go into the more detail, clearly I work, I live, and I've come arguably from a UK perspective, so the thoughts around what does it mean for companies is possibly more focused from a UK corporate perspective, but equally some of it will resonate with international organizations who have an exposure into the UK. But I also have to declare a slight bias, even though I work and live in the UK for the last 25 years, I'm actually a Belgian national. So I definitely have not a clear view either direction, so I'm here with two hats on. So a lot of things have happened, not many answers have been provided, but for now, lots of uncertainty remains. So the first area of uncertainty is the political uncertainty. And the initial uncertainty all evolved quite quickly after the referendum. June the 24th was a very sad day. People in London, in the City of London, felt very sad. There was shock, bewilderment, amazement. Very quickly, there was a whole unraveling of the Brexit leaders all disappeared. There was a leadership election in the Conservative Party. There was a leadership election in the Labour Party. Very quickly, the rhetoric between the UK and the rest of EU leaders unraveled. So a lot of political uncertainty. It sort of calmed down a little bit throughout the summer. And then just after I'd finished my slides, prepared my slides last week, a whole new range of political uncertainty unraveled following the Conservative Party's conference in the UK. And Theresa May's announcement that she will plan to trigger Article 50 by March next year. A lot of talk around it being that she'll want to go for a proper exit, focusing on the immigration issue, which is likely or may come at the expense of the access to open market. So a lot of debate in the UK market, in the UK Parliament, and in the country around that trade-off between immigration versus open access to the market. And from a UK perspective, a possibly naive hope that the two can be compatible. Clearly from an EU perspective, leaders saying you can't have your cake and eat it. So a lot of rhetoric flying around at the moment. There's also a big tussle in the UK Parliament as to whether the government has the legal right to make decisions on what Brexit actually means. And a lot of the MPs saying, well, this needs to go through a proper parliamentary democratic process and a vote through Parliament. So again, there's no clarity yet on who actually has the power to make those decisions. So still watch this space. There's clearly a lot of economic uncertainty. Clearly after the event, the Bank of England cut the interest rates to an even lower 25 basis points. It announced a 70 billion quantitative easing program, the largest program since the financial crisis. There was lots of clearly growth expectations were cut to, I think, 0.4 immediately post Brexit. So a lot of economic uncertainty, and you'll all be familiar with what's happened to some of the FX rates, etc. Clearly, I don't have to say FX rates, sterling hit historical lows. As I said, I just finished those slides too early last week, so an even further weakening. We're now at 122 against the dollar and 111 against the euro. So it's an not all-time low, but a 31-year low at least against the dollar. So massive impact that's had on the businesses. This is the volatility, which actually goes off the chart. So the top volatility at one time peaked close to 70%. It's settled down a little bit, but again, last week's volatility isn't on here. And what we did see is that the sterling dollar volatility was higher a bit, but reasonably stable, as it were, whereas the sterling euro volatility clearly is higher. It's just a sense of any news it's an overreaction in the market. I sort of read this today in the FT about how sterling, you could argue, is almost looking like an emerging market currency where economic data almost doesn't matter and it's just a reaction to political news. So clearly a challenge for all of us treasurers. Quick look on the Footsie, what happened. So the blue line is the Footsie 250, the green line is the Footsie 100. And really the reason we chart those two separately is because quite quickly, so both fell, but the Footsie 250, so the slightly smaller companies, fell by more and recovered less quickly than the Footsie 100, which just sort of demonstrates that the overall economic impact, primarily linked to the FX rate that the market observers and the companies in the UK are expecting, is that clearly a much weaker euro sterling will favor exporters, which tend to be the larger organizations in the Footsie 100, so they will effectively benefit, the export benefit, versus 250 is arguably more import-led industry, and therefore they'll suffer more and therefore clearly a more negative impact. There's a question that asks whether CFOs think now is a good time to take on risk on the balance sheet, and only 8% of the CFOs thought now is a good time to take on risk. And that number, I forget what the history was, but it definitely was much higher in the last couple of years following the financial crisis. Equally, business confidence has fallen. Business leaders have less confidence. And there were sort of impacts in business output, services, manufacturing output did fall a little bit after the Brexit. There are positive stories as well. It's not all negative. And there's so many data points out there in the press, in the market, that's sometimes quite difficult to keep track of where is the balance now, but it's a big uncertainty in behaviors as well. So what does it mean for organizations? And as you might expect, an organization like Deloitte, we have a whole team dedicated, that's not me, but a team dedicated to help our clients think through, well, what are the areas of risk? What is it that you as an organization can think through and start preparing for on working out what the possible implication could be? Clearly, movement of people is one key topic, one key risk that may or may not impact your business more. Some of these aspects will be more relevant to certain industries than to others. It's about immigration, it's about migration of labor, it's about talent. Some industries in the UK, for example, the NHS, the National Health System in the UK, relies hugely on foreign nurses and foreign resources. How will they be impacted as well as other commercial industries? Restrictions to market access. Will the rules, regulations change? Will we still have access to the single market or to the EU? Not just about cost, but actually about ability to access the market. The easiest example, the one most talked about, is the banking passporting structure, or the passporting or the equivalent structure. What basis will the financial sector be able to work across in each other's territories? But it applies to other industries. It applies to pharmaceuticals, where you need license to operate in different geographies. Will your organization continue to be able to access in all jurisdictions that you are in now? With that cost comes the cost of market access. Yes, you may still have market access, but the cost may increase, may change. It might just be tariffs, import duties, the obvious one, but equally the cost of different licenses, the cost of having to set up local presence, potentially big cost impact. But there might be market opportunities. There might be new markets to explore. I think I sort of read that Australia was one of the first countries apparently to reach out to the UK saying, we'll do a special trade deal with you. Companies should also be aware of the opportunities as well as the potential risks. And this is just, I'll definitely will not go through this, but this is sort of just to, summarize some of the thinking that over the past couple of months are this Deloitte sort of Brexit focus group has worked through with discussions with our clients to think, well, all of these different risk areas, how do we think they are relevant to a lesser or higher degree for each of our industry sectors? And it's just a tool to allow you, with sort of as treasurers, with your wider senior management team, to think through, what might be important for us and what do we need to keep an eye out for. I might sort of let me skip on that one. What I just wanted to talk through is sort of a question of, actually no, I'll go back, sorry. The question is then, well, how do you go about this in a company? What is that you have to do to prepare for it? And it's almost sort of adopting a planning and coming up with possible strategies approach that is required. So it's effectively saying that Brexit may require some important decisions, and some of these decisions will have a fairly long lead time, and therefore it's about deciding what is the right time to make those decisions, and thinking it's an evaluation of what is the cost of making decisions too soon, when there's still lots of uncertainty and volatility about what the possible outcome may be. If you make decisions too soon, you might be wrong decision, might have too much cost, versus the cost of having missed the boat and having not made a decision early enough and not being ready for when you need to be ready. And this is effectively sort of trying to summarize that where we are now. There's a huge range of outcomes. The whole discussions between the hard exit and the soft exit. Is it really leaving the EU completely? Will it be adopting one of the other models that exist, such as the Norway model, the Swiss model? There's a whole different variation of models out there. Where do we sit on that spectrum? Each will have different implications, therefore the possible outcomes. It's still a wide range of possibilities. As time progresses, some of these questions hopefully will be decided upon, will be settled, will be decided on, and therefore the impact on your organization will be better understood, and you can gradually start making those decisions. That's what sort of this approach timeline aims to summarize. So what does it mean for the treasurer and for your teams and your role? First, a few words on funding and liquidity. And this is very much from a UK perspective. So what we did not see, there was definitely no shutdown in liquidity. It was not a new financial crisis as we had in the late 2000s. Nothing of that sort. What we see from banks in the UK and maybe on continental Europe, I'm not sure, is banks will ask, if you go into the market and raise new finance, banks will ask, what is the impact of Brexit on your business? So you better have thought about it, and what will you do about it? So banks want to start getting a sense of, before we lend to you, is there a potentially big Brexit impact? It's clearly one question. We've seen increased demand in European bond markets, so we don't think it's necessarily a big impact there. There is always a question now that sterling is so cheap, will that drive a bit more inbound M&A into the UK? Do assets become more cheaper? Arguably, if they're cheaper to buy, the sterling cash flows that you buy with them is also cheaper. So arguably the value doesn't change, but your dollars will now buy more assets, so there's a bigger volume. It's not that everything becomes cheaper per se. We've talked about the passporting rights, and clearly there is this theme around making sure that you all stay close to your banks. Once the banks start figuring out what it means for them, how does it change in their banking model, how does it need to change your relationships with your banks, is a theme there as well. But a bit more precise, so as a treasurer, what should you have done? And maybe as a treasurer of a UK company or an organization that has lots of exposure to the UK, what should you probably by now have done? What should you be thinking about now, and where do you need to head in the sort of more medium to long term, whether it's 2 years or 5 years? Frankly, who knows? The immediate results clearly were to sort of manage the immediate volatility following the Brexit shock, which frankly it was. So we know that a number of companies were prepared, a number of companies took actions along the lines of, do we hedge more to see us through that period of volatility? Do we need to hedge a bit more of our tail risk? Are we comfortable that we can deal with whatever the market throws at us at the end of June? We had some great examples of some clients of ours who were close to, one example, a dollar functional business who is due, as a result of an acquisition, had to sell some assets in the UK within the next 6 months. They had not quite hedged those assets with dollar borrowings, they hadn't created that natural hedge. As it happened, they needed to raise funds for another acquisition. They said we better raise some borrowings in sterling to increase our natural hedge. That paid out very well for them. It wasn't a speculative trade. It was actually hedging us as I could have hedged in the past. The timing was brilliant for them. So questions around, can we tweak our hedging policies? Not start speculating, I would suggest, but tweak them to make sure that perhaps you hedge more of that slightly bigger volume, slightly bigger tail risk to see through that volatility. We saw some companies where they had to really think about their interest rate hedges that they had in place. At the smaller end of organizations, some interest rate swaps that, as the interest yield curve dropped quite suddenly in the longer end as well, in sterling, interest rate swaps went far more out of the money, and suddenly they were required by the banks to start placing collateral. That triggered sort of a number of sort of interest rate swaps, restructurings, closing out. The banks often are quite happy to get out of some of these swaps, so is there an opportunity there to restructure or close out some really out of the money swaps? Funding, we didn't see a huge amount of action needed around funding. For some of the companies where FX was a massive exposure, testing the covenants, we know some companies are coming quite close to covenants, but not a huge amount other to do on the funding there. Medium term, other than sort of continuing the previous themes for previous slides around making sure that you are covered for those immediate sort of volatility in FX and funding positions, this Brexit shock is almost a good reason to test how well your treasury policies and practices stand up in a time of turbulence. Did your results on FX, were there any unexpected results? Were you able to explain the impact? Were you able to explain to the CFO or to the board, this is what our exposure is to sterling for non-sterling companies or to other currencies for UK companies? I heard of one company where the CFO asked his finance team, tell me what is our exposure from the UK to various currencies, and two different analyses delivered two different answers. So it's really saying, do we really understand what our position is, and did we achieve what we set out to achieve? Did our governance work well? What we saw, lots of companies having to quickly wanting to do more hedging, less hedging, just to react to that turbulence. How easy was it to change your policies? How easy was it to seek approval for that extra layer you want to do, or that unusual or on normally not allowed transaction? Were you able to quickly get to the right decision maker and get that approved? So effectively saying, let's take stock of what happened. Were there surprises? Were there things that didn't work very well? And let's fix them. Is what you can do now. The long term is basically watch and see, and work closely with your colleagues and work closely with the banks is really the advice here. So it's being aligned with your business. When we go back to the sort of initial implications on what might it do to your access to different markets, to your business partners, will the business model change? Will your internal supply chain model change? Will your customers or suppliers change? What happens to your supplier if they can't access your market anymore? And be prepared for Treasury to really understand what those changes means for your business. It might change the currency profile of your business, because suddenly for, I'm just sort of making this up, for the UK business buying all its goods in euro, they've suddenly become 20-30% more expensive. They might think, well, actually maybe we should source some of these products from a UK supplier to get rid of that FX risk and bring the cost down. That changes your currency profile. Make sure your processes are up to speed to quickly, effectively change your FX forecast, change your FX hedging strategy, and work with the business to work towards that changed model. Work with your banks. It's not on here, but clearly goes without saying, work with your banks, stay close to your banks. They will not have the answer yet, but as soon as they know what's happening to them in terms of that access, the passporting, the equivalent structure, do you need to change counterparty? We already know there were somebody told me today here that some companies are being asked to change their bank counterparty from a UK base to another sort of country base. So some banks are actually preempting potential outcomes. So speak to your colleagues, speak to your banks, and also think carefully about your communication to other external stakeholders such as rating agencies, they will want to know impact information as soon as you have it and as soon as you can share it with them. So despite the UK is the latest ranking in the World Economic Forum, was ranked the 5th in terms of global sort of scale of business. So depending on which body ranks the strength of global economies, you come out in different numbers, but the UK comes out somewhere at the top. And I just sort of put it here to, and we shared a message that even though the business world on the whole was shocked and did not want this outcome, equally at the moment there is a resolve and a determination by business leaders to be positive towards their staff, towards the environment, towards everybody else, so to make Brexit work and to say, well, that's what's voted for. People might have wanted a revote, people might have wanted something else, but saying, well, the UK will have to move forward now and make it work. Conclusions, it was a shock. There was no major systematic impact. It wasn't the Lehman's, it wasn't a financial crunch. It was just a big shock. It's a process, not event, so it's a long, messy process. We're getting some strong messages from the Prime Minister. She's getting some strong messages back from her other members of Parliament, but that's still ongoing. And therefore, for corporates, it's about understanding what it might impact, how it might impact you. I haven't sort of talked about the point. There is definitely an element, and some industries are better than others, around preempting what might it mean for you so that you are able to influence decision making, that you're able to speak to the government, effectively do some lobbying and say, well, we need to have these changes. The Mayor of London, a very vocal person, is saying we must have a separate access structure for London. I have no idea how that would work, but it's about making sure that businesses are prepared and therefore help put their case forward if they're able to influence the outcome. Thank you.